Welcome back, everyone, to the Daily Hunt. It's Monday, March 23rd, 2026, and I'm Ethan, your guide to market potential. And I'm Brooke, here to keep us all grounded with the numbers and, well, the realities. Today's a bit special, Ethan. It is, Brooke. Yesterday was pretty quiet. Our AI, for all its brilliance, didn't flag any standout new opportunities for us to hunt down. So we figured, why not use this as a chance to look back? Exactly. Instead of looking forward, we're doing a review special. We're going to dive into the performance of the stocks our AI-generated insights identified from March 9th through March 13th. It's always good to see how those past speculative analyses played out, right?
Absolutely. It's like checking the scoreboard after the game. It helps us understand the market's pulse, what truly had traction. All right, let's jump straight into the highlights. Brooke, I've got to tell you, one stock really caught my eye. Cheniere Energy, ticker LNG, from March 9th. Wow, that one really broke out.
It certainly did, Ethan. Our data shows LNG closed yesterday up a solid 14.01% since its first mentioned price. And get this, at its highest point, it soared an incredible 20.56% above that initial price. It took about 10 days to hit that peak, which suggests, a pretty sustained, strong upward trend. Isn't that fantastic? 20% in just over a week. That's what we love to see when we talk about potential growth. It really speaks to the underlying fundamentals, and the AI picking up on something significant there in the energy sector. That's a true multi-bagger in the making, if you ask me. Well, it certainly showed impressive upside, Ethan. But on the flip side, we also had some less stellar performances, and I have to point to Next Energy Inc., ticker NXXT, from March 10th. It was flagged as a speculative gamble, and unfortunately, it lived up to that high-risk label.
NXXT. Yeah, that one didn't quite pan out.
No, it didn't. This stock closed yesterday down a substantial 20.58% from its mentioned price. It barely even saw any initial pop, hitting its highest point on the same day it was mentioned, only up 2.31%, before taking a significant dive. This highlights why that speculative gamble tag is so crucial. When you see numbers like that, it means swift downside risk can materialize quickly. It's a good reminder that not every speculative analysis pans out, and risk management is key.
All right, let's keep this moving and run through the rest of the list from that week, because there were some interesting movements, both up and down.
Agreed. Let's see the full picture. KBR, ticker KBR, from March 9th, ended down just 0.64%. Not a huge move either way.
Then we had Colgate, CL, also from March 9th, a speculative gamble. That one dropped about 7.78% by yesterday's close. Sometimes those gambles just don't hit.
Indeed. NVIDIA, NVDA, a buy pick on March 10th, saw a 6% dip from its mentioned price. McDonald's, MCD, another buy from the 10th, closed down 5.69%. Alphabet, Google, also from March 10th, ended down 2.43%.
Robinhood Markets, Hood, from March 11th, a speculative gamble, closed down 9.22%. That's a pretty big drop for that kind of platform.
Micron Technology, MU, from March 12th, was a buy, and it actually ended up 5.15% yesterday. That's a decent positive move. Its highest point was even better, up over 16.5% since mention.
See, there's that growth potential. And Nebius Group, NBIS, a speculative gamble from the 12th, was up a solid 8.59% by yesterday's close. And at its peak, it was up over 21%. That's what I'm talking about. But let's not forget Hims & Hers Health, HIMS, a cautious buy from March 12th, which actually closed down 12.29%. A reminder that cautious doesn't always mean safe from significant dips. And finally, CF Industries, CF, from March 13th, closed down 2.23%, while Reddit, RDDT, another speculative gamble from the 13th, edged up 2.56%. So looking at the averages, our buy picks from that week, well, they were collectively up a tiny 0.31% yesterday, which, is still better than the Dow, S&P 500, and NASDAQ, all of which were down over 4% on average for that same period. Yes, but our cautious buy category was down 12.29%, and speculative gambles were down 5.28% on average. Overall, if you bought every single one, the portfolio would have been down 2.81%. It underscores that even in a down market for the major indices, some individual names can still pop, while others, can really fall hard. Well, it's certainly been a mixed bag looking back at that week. Some real standout winners and some not so standout performers.
Exactly. It's crucial to remember that this entire review is based purely on historical data. These AI-generated insights and our market commentary are just that, commentary.
Right. Just because a stock showed potential or took a dive in the past doesn't mean it's going to repeat that performance in the future. The market, as we all know, is incredibly dynamic.
And to be absolutely clear, the content we share is generated by artificial intelligence, and while impressive, AI can make mistakes. This isn't financial advice or a recommendation to buy or sell any security. Always, always conduct your own thorough research.
Or, talk to a licensed financial advisor before making any investment decisions. They can help you navigate your specific situation.
That's all for our review special today on The Daily Hunt. Thanks for tuning in.
We'll catch you next time for more market insights.